Double entry principle. Double entry principle. Good day, viewers. Welcome to Web Educate. Today, we want to focus on double entry principle, and we are covering an illustration under double entry principle. Just a small question. In case you are new to this channel and you have not subscribed to the channel, please subscribe to the channel by pressing the red button. I go over the illustration. Illustration A. Bought office machinery on credit from Bola John Limited. B. The proprietor paid a creditor, Kunle Kate, from his private monies. C. A debtor, Thomas T, paid us in cash. D. Repay part of loan from Kenny Master by check. E. Return sum of office machinery to Bola John Limited. F. A debtor while Aliyu paid us by check. G. Bought motor van by cash. This is the illustration. I'm going to rub off the question now so that I quickly solve it. So I rub off the question. The requirement is debit and credit the transaction in the proper account. Debit and credit the transaction in the proper account. It is right of the accounts. Right of the transaction in the proper account. And what is the first question there? The question says, bought office machinery on credit from Bola John Limited. Bought office machinery on credit. Every transaction in accounting that is double entry involves two accounts. One to be debit and another to be credited. Separate accounts with equal amount. That is bought office machinery. Bought office machinery on credit. Bought office machinery on credit. And this is A. Bought office machinery. That is office machinery. Office. This is solution. Office machinery. You credit it. Credit what? Office machinery. Okay. The credit machinery. It is not just account to be debit and account to be credited. That is the question. Which account are to be debit and which account are to be credited? Account to be credit. A. Account to be, say, bought office machinery. When you bought office machinery, that means you debit office machinery. From who? From John. That is the credit. John, Bola John Limited. Credit Bola John Limited. Credit Bola John Limited. B. You can just say the proprietor paid the creditor Kunle Kate from private money. In our former video, we talk about when you are talking about private money. That is introduction of capital. Pay a creditor. That is pay a creditor. That is pay the creditor Kunle Kate. Who received the money? Kunle Kate. Debit Kunle Kate. And credit what? Say from his private money means from that is he introduced a capital, that is capital increases. That is debit capital account. capital account, Bola John account, office machinery account. Then C, a debtor Thomas T paid us in cash. Cash, that means cash received. Asset of cash received, the money, that is debit cash. Then credit Thomas T. Thomas is the one that paid us. Thomas T. Then D. D said we pay part of loan from Kenny Master by check. We pay part of loan, that is, we pay Kenny. From where did the money come out? From bank, from check, by check. When you hear check, that means who received the money? That is Kenny Master. Kenny Master received the money. You debit Kenny Master account. Kenny Master account. Then credit bank, because so you pay part of loan by check. Credit bank account. E, return sum of office machinery to Bola John Limited. This is return, no return outward. This is just return. Return outward is what is of asset of stocks, but this is just ordinary machinery. Machinery is not the daily, is not the ordinary business of what, of the ordinary activity of what, of the business. This is what extraordinary. So it will go to what, office machinery. So return sum of office machinery to Bola John Limited. Who receive it? Debit Bola John Limited account. Who give out? Office machinery account. Office machinery account. F. What is F there? So a debtor Wale paid us by check. A debtor Wale paid us by check. What are you going to do? Who receive? Check received, that is bank. Debit bank account and credit Aliu. Why Aliu? Why Aliu is the person that what? That pay us, our customer pay us. Then EF. G, bought motor van by check. Bought motor van, that is motor van received. Debit motor van account. Then credit by what? By cash. The credit cash account. Credit cash account. These are the what? These are the account to be credited and account to be debited. Based on the questions. This is just a small illustration on double entry principle. Once again, if you have not subscribed to our channel, please do subscribe to the channel to help us cover more people all over the world. And also, whenever we do provide more of this in the future, YouTube will be able to notify you. Bless you. See you in the next video.